Hey everyone, I'm Matt Pappas, and here's your quarterly market update from Cottonwood. Today's going to be a bit of a data dump. We have a lot happening and a lot of changes have taken place over the first half of the year. So I'm going to dive into that and tell you what it all means and what we're thinking. Markets reacted very sharply to the US tariffs, which have surged from 2.5% to 27%. What's behind the move? Well, new tariffs have hit Mexico, Canada, and China, rising as high as 145% before stabilizing near 55%. That's not counting the reciprocal tariffs, which are now at around 50%. Now, tariffs briefly paused, but they're set to resume later this month. The U.S. has also imposed new auto and steel tariffs and are discussing annexing areas like Greenland, the Panama Canal, and even Canada. Amidst all this, we now have geopolitical tensions that have escalated with the U.S. and Israel bombing Iran. And also immigration policies have tightened dramatically. So all of this uncertainty has really influenced areas like gold, which is up nearly 25%. Surprisingly, despite these events, the S&P 500 is up over 5%, and Latin America markets are leading the international space up roughly 26%, which is really hard to believe. The US dollar, which is now down over 10%, is really boosting these foreign markets and commodities, in our opinion. And the expectations for earnings in US companies has dropped about 8%. So it underscores that tariffs are really affecting corporate profits, especially here in the US, more so than they're affecting consumers, at least right now. On the other side of things, bonds, and specifically in the treasury bond market, have posted really strong returns, but areas like US REITs are actually lagging global real estate, which is interesting. So what does this all really mean? Well, as I said at the beginning, this is going to be a bit of a data dump. The tariff situation, the geopolitical tensions have created a lot of uncertainty. And unfortunately, we think that uncertainty is going to continue through the second half of the year. What that does, though, is reinforce the fact that diversification is back in style. So stay vigilant, remain diversified, and stay tuned for more insights. Thanks for listening.